Remind us of what this spoofing investigation is, Jesse.
Yeah, so, spoofing is this practice that regulators and prosecutors have really been concerned about in recent years, where traders are basically tricking other market participants into moving assets, prices in their preferred direction. You do that by flooding the market with a number of fake orders and then immediately canceling them. As we all know, in the era of lightning-fast computerized trading, these transactions happen so quickly and other computers respond to those orders. So the goal is to put out a bunch of orders, get markets to move in your direction, then cancel the orders and profit. And post-Dodd-Frank, regulators simply crack down on this practice. This would be a record settlement involving spoofing, I would add.
So is it isolated to JPMorgan? We know that there were question marks over the precious metals desk for some time. But again, this is a record fine. I think the previous record was just more than half of this. So you wonder if this is going to be the end of it, not just for JPMorgan, but for any other bank out there that may or may not have been engaged in these type of activities.
Well, one thing we've learned covering these sorts of investigations is I would always be hesitant to say that I know for sure that there isn't worse conduct out there, because every time you get a record settlement, it seems like within a couple of years you get a new record. And we also know that it's rarely the case that misconduct was isolated to one bank. Usually you need other conspirators at other firms to pull off a lot of these tactics. Not saying that that's what was going on in the JPMorgan. We don't have those details, but that's certainly been the case in past settlements with this kind of conduct.